I welcome all of us to this program that comes up every Wednesday. It is a free webinar. It is an opportunity for us to share experiences and to ask questions and get answers. I am always excited about this meeting. I look forward to it because I benefit from what you will bring and what I will bring. And it has been growing. So we continue to make it to grow. You are allowed to bring people. You are allowed to invite your friends, your business, and those who even want to start business. You are allowed to bring them to come into the meeting. It's free, and we look forward to seeing you. The more we are, the merrier it is. And we want our country to have a richer economy. It is when the individual companies there are doing well that and on aggregate, every part of the country will be doing well, and the country as a whole will be doing well. So we need to make sure that we do our part to make our companies to grow. When you grow your business, you employ more people. When you employ more people, those ones will be getting money and they will be paying people. The multiply effect on it will make for a higher standard of living for all our people. Let us try to see that we grow our business. Focus on the growth of your business. COVID-19 should not limit you. It should not limit you. It's a temporary thing and it will continue to be there for a while. If you fold your hand because of COVID-19, you will not be able to start. By the time you want to start, others will have been ahead of you. Competition will be too much for you and it will be too late. So start your business, grow your business, move forward. Tax people are still talking to people whether there is COVID-19 or not. They will still be calling you. They'll still be writing letters to you. You cannot avoid it. So it is good for you to know what is happening in the tax sector as you grow your business, as you restart your business, as you move ahead. When you want to go out, please take precautions because COVID-19 is still there. I understand that many people are not taking account of COVID-19, just as some people are not taking account of tax laws and tax changes. You cannot avoid them. COVID-19 will still be there, will still
Hey,
be
what are
catching people and dealing with them. Hello? Hello?
Go answer.
So COVID-19 will still be there and catching people who are careless. Please don't be careless. Use your face mask and observe social and physical distancing. It is necessary for you to wash your hands regularly and use to talk to us on changes. I want you to know that government changes. 7 different laws were affected by the changes. The Companies Income Tax Act was changed. The Petroleum Profit Tax Act was changed. Personal Income Tax Act was changed. Value Added Tax Act was changed. Customs and Excise Tariff was changed. Capital Gains Tax was changed, and Stamp Duties Act. So what's the main reason? Why would the government be changing this or all these laws in one swoop like that? The main thing is for government to raise more revenue. The government's revenue is dwindling. And so government is focusing on tax to get more revenue. So to increase the tax rates so that more revenue will come to block some areas where people can use methods to do tax avoidance. Government is blocking them so that they will not use them. And so government will get more money. Also, government is doing all these things in order to make clarifications of some ambiguous tax provisions so that government will be able to use that opportunity to bring such activities into the tax net. And also government is expanding some areas, in some areas the basis of activities that will be taxable, expanding things that were not taxable before, making them to become taxable, and areas where there are loopholes, stopping them. But you need to look at it and see how you will be able to engage yourself and take benefits for your person and then for your company. Don't forget that if you have a limited liability company, you as a person will pay your tax and your company as a legal entity will also pay. You will be paying from two different levels. But if you have a registered business name, if you have a registered business name, your company and yourself is taken as one when it comes to tax matters. So it's my pleasure to call on Kike to tell us now the changes in tax laws, and then we will look at how we will take benefits from it. Kike Lomo, please.
Thank you very much, sir. And benefits. This information will help your business and also help you as a person. So on the outline, we are looking at introduction, we are looking at what has changed so far, we are looking at your personal benefit personal from these changes in taxes, we are looking at the benefit your business can derive from the changes that have come to tax laws, and then what's next thing you need to do to be able to benefit from all this. So, as a way of introduction, we recall that on 13 January 2020, the President of the Federal Republic of Nigeria signed the Finance Act 2020, which is called the Act, into law.
Where are you going?
The Act implemented in February 2020. That was announced by the Federal Ministry of Finance the minister in that ministry. The Act, as mentioned by my boss, amended 7 existing tax laws, but most of the changes noticeable in the company income tax. Yeah, thank you very much. So we are going to look at what has changed so far. What are the things that have changed from the 2 types of taxes in Nigeria, the broad tax types? We have the direct taxes and we have the indirect taxes. Can you go to the next slide, ma'am? So on direct taxes, there is introduction of the turnover threshold. In the past, all companies in Nigeria are regarded as companies. Either you are small, you are big, you are medium, you are large. The same taxes is being paid by everyone. The same tax type and tax percentage is being paid by every company or every business. But introduction of the Finance Act 2020, there is a turnover threshold that has on every Nigeria. So the companies in Nigeria has been grouped into 3 major types based on their turnover. The first group of companies are the small companies. Second group are the medium companies, while the third group companies are exempted from including taxes on. So that's where we are. We are expecting that the area of withholding taxes will have been dealt with. So apart from the small companies, there are also medium companies. Those are the companies that have turnover or revenue from 25 million naira to 100 million naira. So if your revenue in a year is business has gotten to that threshold of 100 million and above, you'll be paying company income tax of 30%, 2% education tax, and then the other taxes like that. So that's the first thing that the Finance Act 2020 introduced to us in Nigeria. Then the second aspect of what has changed is the elimination of risk of excess dividend tax. In the past, if a company make loss or is not having any chargeable profit is taxable profit. There is no profit that will be taxed. So, and the company still go ahead to go and declare dividend. As paying dividend out of retained earnings, out of the earnings that's made in previous years. The Section 19 of Company Income Tax, previous Company Income Tax Act, is saying that that dividend must be taxed. The dividend that is being declared out of retained earnings must be taxed. But from 2020 February, the Finance Act says no. The retained earnings that the company had has already been taxed before it was profit after tax that goes to retained earnings. So any dividend that is taken, that is declared out of retained earnings, that is the company did not make any profit, has run into loss, and then you declare dividend from retained earnings, that dividend will not be taxed. So that is another thing that the Finance Act has brought in. The third thing is the elimination of commencement and succession rule. In the past, previously, there is this commencement rule for companies that are just starting business. So companies that are just starting business are made to pay through their nose because of the law at that time, more than those that are still continuing business. But with the introduction of this Finance Act, that particular aspect of the law has been cut off, has been eliminated. Companies that are commencing business and companies that are ceasing business are now made to pay taxes on actual basis. It's not something that is like, it's not the way it was that you're supposed to pay double of the year you are commencing business or ceasing business. So another one is modification of minimum tax provision. Previously, minimum tax, if a company does not make a profit in a year, the company will be made to pay minimum tax. Minimum tax computation is based on, sometimes if you don't have any income, you don't have any turnover, you will pay based on your assets or based on your equity, on your capital. You'll be asked to pay based on the capital of the company, as if you are paying from the amount supposed to use in even making the business to grow. So that aspect of the law was extinguished, and then a new minimum tax provision was introduced that says you should pay 0.5% of your revenue. So if you don't make any revenue in a year, that is, the company does not make any revenue, you will not pay any minimum tax. So that is the modification that has been brought into minimum tax provision. The last one on direct tax, the change in direct tax is a exemption of export proceeds. In the past, the profit from exports is exempted completely from whatever profit you made as an exporter of any goods. The profit from that export is exempted completely from taxes. But now, what is exempted is if you are able to bring that money back, as in if you are able to use that money, the proceeds from export, if you are able to use it to borrow materials, or are able to use it to buy machines and other things to make your business to grow, the proceeds will be exempted. That's the new law. In the past, most people export, they will just take that money and go and use it outside the country and the rest, and they still not pay taxes on it. But now you must repatriate, as in you must use that money, the export proceeds, you must use it to grow the Nigerian economy. That is, you must buy things that will grow the Nigerian economy, like raw materials and every other things, so that you'll be able to enjoy exemption from taxes. That's what has changed in the direct taxes aspect of the Finance Act. The next slide. So what has changed in the indirect taxes is an increase of VAT rate to 7.5%. The VAT rate, that one is the one that is mostly known by everybody, that the VAT, value-added tax rate, has been increased from 5% to 7.5%. So for every for every good that you are selling, you must make sure you charge VAT on it. And when you are also buying goods, you also pay VAT of 7.5% on it. Then compliance threshold. There's a threshold for compliance with VAT for value-added tax. If you are a small company, you don't need to comply with value-added tax. You don't even need to register. The law has exempted all small companies from complying with value-added tax. You don't need to register, you don't need to file. There are sections of the law that has been eliminated that says you don't need to register at all, even for VAT. You don't need to file. You don't need to charge VAT because you are not you are not within the threshold of a medium company and large company. Once you are within the threshold of a small company, you are not liable to VAT. Then the third one is expansion of the list of basic food items. The basic food items, the list of basic food items has been increased. In the past, there has been so many issues on what constitutes basic food items, because basic food items are exempted from VAT. So now the basic food items has been the what constitutes basic food items has been expanded to include aqua and raw and food materials. That's it. And those that are in the water aspect and those that are in the food aspect. That is agro and aqua. So once your product is categorized within the aqua aspect of Nigeria product, like water, beverages, and the rest, they are all exempted. And if it's agro based, like food, there's this staple table food, food that people eat, they are all basic food items. They are all exempted from VAT. So the fourth one under indirect taxes is accounting for VAT on cash basis. In the past, in our Value Added Tax Act of 2004, what we do is either you have collected the money from the sale, or you have not collected the money. You are supposed to pay VAT. You are meant to pay VAT. Either you collect money from that sale or not. But from the Finance Act 2020, the VAT is on cash basis. It's on cash. Once you are able to collect the money, it's not based on invoice. It's not based on the invoice you have issued to customer. It's until when you are able to collect the money from that invoice that you pay VAT on it. So VAT is no longer based on invoice, it's now on cash. Then there's excise duties that has been introduced to imported products. So can we go on, Ma? So how you can now use the tax changes to your personal benefit. The next slide, how we can use the tax changes for our personal benefits. So for our personal benefits, we have the payee, the pay as you earn tax, which is the Personal Income Tax Act. So how you can use all these tax changes you have mentioned to your own benefit as a person? The first one, if you're a director in a company, make sure you pay yourself salaries. Make sure you pay yourself salary. Even if you cannot pay now, approve for it. Let it be in the books that the company is owing you. The reason is because if you don't pay yourself salary, when the time comes and the tax people come, either Lagos State or any other state government comes where your company is, and they come and ask you where is your evidence of payment of salary as a director, and you're not able to show them that you have already paid your salary, you have already paid the taxes on the salary, they are the one that will determine what salary should be. And then they will now ask you for your bank statement or whatever and start determining what you should pay as taxes. But if you have been paying yourself salaries, it will be as if you're just paying at that time when they come and they ask you to come and they determine what the salary should be, because based on what other people in the same industry with you are collecting or are earning. At that time, you'll be at their mercy that you don't have a salary scale for your directors or for yourself. But if you have a salary scale that you have put in place and you are paying your salary and you are paying taxes on it regularly, you may not be in such a mess. That is a benefit for you if you are paying yourself salary. Another one is you increase your tax deductibles. You increase your tax deductibles. There are so many things that are deductible for tax purposes. If you are an owner if you own a business, because as rightly said by my chairman in the beginning, he said the business of a business venture or an entrepreneur is not distinct from the owners. So when you are paying taxes as a business enterprise, you are paying it together with your business. You are paying taxes of yourself and the business together. So when you are paying such taxes, for you to be able to reduce your tax payable, make sure your tax deductibles is increased. Like you make sure you invest more in capital assets. That will increase your capital allowances you're supposed to use in reducing your tax liability. As a person that is working somewhere or thereabout, you can, when you have pension or NHF or all other tax deductibles, the tax allowances that will reduce the taxable income. So make sure you increase that tax deductibility now to be able to pay lesser taxes. File and pay as and when due. That's another benefit. If you file and pay as and when due, you are able to remove all the penalties or interest that will be charged on you for not coming to file and pay. For the filing, if you are a business owner, make sure you file and pay the PAYE of your staff latest by 10th of the following month when the salaries are paid. The salary for the month of September will be due by October 10. That is the due date for payment of the PAYE on their salaries. Then for directors of the company, you file and pay the directors PAYE or directors tax by 31st March of the following year. Directors tax is paid yearly because direct assessment. So by 31st March of the following year, you will pay the taxes of the director. So when you are paying and filing as at when due, you will not be liable to pay penalties or interest on not paying. And then because penalty for not paying is 21%, while interest is 10%. So that 1% of amount you're supposed to pay will have been additional taxes you will have paid if you have not been filing and paying when you're supposed to do that. Then keep records of your income and expenditures. Make sure that you keep all records, all business income and even personal income and expenditure. Make sure you keep records. If you don't keep records, anything you are not able to give, anything you are not able to submit, anything you are not able to give to them as a expenditure, as evidence for your expenditure, will not be taken as part of your expenditure. Like you have said, you have traveled, you have gone to some states in Nigeria, I'm not able to show them evidence that you have traveled. There's no ticket to show that you have traveled truly. Then that particular expenditure will be added back to your income and be taxed. So if you're able to keep all records of your expenditure is even more important to keep. For every expenditure you make under your business, make sure you keep records. Record keeping will help you reducing your taxes. Then another one is do not mix personal effect with business spending. When you are having some business spending, when you are making some business expenditure, don't let it mix up with personal effect. That's why we say pay yourself salaries. If you are whatever personal expenditure you want to make, ensure that it is from your own salary, not from the business income. Make sure that you don't mix it up. By the time because if you do that, when the tax people comes, tax officials come, tax authority, when they come and meet you, they will have seen that the business is not separate from the owners, and then they will take whatever income is in your own your whatever money is in your own personal account with that of the business and add everything together and tax it. Then for other tax types, your withholding taxes, make sure that for every amount, for every money you pay, for every contract you do, or for any work you do for anyone, and they withhold any of your fees, instead of giving you 100 naira, they are giving at 5 naira. They said they have withhold 5 naira. Make sure you follow up and collect the tax credit note, because you are going to use it to pay your own taxes. Withholding taxes is an advance payment of taxes. If anyone deducts withholding tax from your money or from your business, make sure you follow up and collect the credit note. They will pay it, and then they will give you a paper that shows that they have paid it, FRS paper or Lagos State paper that will show that they have paid the money on your behalf. So when you are not paying your own taxes, you will use that paper to pay. For instance, if they have withhold 20,000 naira from your money, and then you are now you now want to pay tax of 20,000 naira, or less than 5,000 naira. In that case, you pay 5,000 naira extra because you have 20,000 naira already in the paper which has been paid on your behalf. That's about withholding taxes. And then you are also obligated to withhold taxes from anyone that is doing contracts with you. That is that, and then you pay over and give the person or company the withholding tax credit note. Then dutable instruments, there are so many instruments that attract duty, stamp duty based on the new Stamp Duty Act. Make sure that for every dutable instrument you stamp it as when due. There is a 30 days time or 40 days now for every dutable instrument, and make sure that now, because the state governments are not so much having so much enforcement on stamp duty now, try and deal more with personal with individuals on debitable instruments. Leave do less of companies now because FRS is everywhere looking for money through stamp duty. So do more of individuals. Deal more with individuals when you are having debitable instruments. So can we move on now? So how to use the tax changes for your business benefits. The next slide. How to use the tax changes for your business benefits. So for your business benefits now, we have put in some things that we need to do in order to have that to benefit from the tax laws, that changes in tax laws now. The first one is register a limited liability company, register an LTD. The reason why we say you should register an LTD is because general corporate tax exemption is allowed for small companies. As we have mentioned before, a part of the changes in the tax law is that the corporate tax, the company income tax, education tax, and value tax is now exempted. Is now exempted for all small companies. There's no how if you are just starting a company, you will still be small at the beginning. So when you register your company, register as a limited liability company in order to be able to enjoy a small company exemption from taxes. If you register a business name or you register a business enterprise, you are not eligible to that threshold.
That is now 300. You know, we go pay.
Can we please mute everybody?
Promise. Over.
So as we're saying, you are supposed to register a limited liability company. That's for you to be able to benefit from the tax exemptions that is allowed for small companies. So for you to be able to enjoy that, you register a limited liability company. But if you register a business enterprise, you are either you make 25 million naira revenue, or you make 5 million naira revenue, or you don't even make any revenue at all, you may be liable to pay some taxes. But if you have a limited liability company, you may not pay taxes at least in the first or second year of your existence. Then another one is you should ensure you make profit. This one will make you to avoid minimum tax at 0.5% of revenue. You know, we're talking about the minimum taxes that has now been taken from some percentage of assets and some percentage of share capital to now 0.5% of revenue. It's very good. But the bad part of it is that if you don't make profits, you are supposed to pay minimum taxes. And if you don't make profit and you are asked to pay minimum taxes of 0.5% of revenue, that will be that may be killing. Because let's look at a company that have a turnover of 20 million naira in a year, but let's say okay, a turnover of 40 million naira in a year, and then you are now meant to pay after removing your expenditure and every other thing, you arrive at a loss. Arriving at a loss means you are going to pay minimum tax of 0.5%. If you calculate 0.5% of 40 million naira, that's a whole lot of money, which will have been avoided if you make profit. So whatever you are doing in your business, ensure you make profit. If you make profit and you are supposed to charge 20% of your profit, is better than paying 0.5% of your revenue. So that's why we say you should make profit at every point in time. All your business strategy must be to make profit. Never ever show any loss, because in the past showing a loss position, it was very good because to make to pay taxes and all the rest. But now it's not so. If you make loss, it's at the detriment of the business. Then another one is do not engage in services only. This one will help you to claim liquid VAT successfully. Those that are into services will pay 7.5% of their total turnover, of their total revenue. But those that are having some other services, some other products that they are selling, that they are not in service only, they are having other products they are selling tangible goods, they will be able to claim liquid VAT because they will buy raw materials, and then while buying raw materials, they will have also been charged VAT, they will have paid VAT, and then they will be able to claim liquid VAT. Even if you are still a small company and you are being charged input VAT, it is still recoverable. If another big company charge you input VAT, you will just file it to the tax people, to the tax authority, and say they have charged me input VAT. Please keep it for me so that when I become big, I'll be able to use it. So please do not engage in services only. Do tangible goods. You want to collect stamp duty by all means. So if you are dealing with individuals, the stamp duty of individuals are being administered by state government, while the stamp duties of companies are being administered by the federal government, which is FRA. So as at now, no state government has come up to say they want to collect stamp duty on any instrument. So that's why I say for now, please deal more with individuals so that you'll be able to avoid paying all this huge amount on stamp duty. Then another one is make sure you keep proper records and file returns. This one will be able to reduce your taxable income and avoid penalties. We have talked about that one before. Make sure you keep proper records for either for your business or for your personal effect. Make sure you keep proper records of all your spendings, of all your income, and make sure you file your returns as and when due with the tax authorities. The last one I'm going to mention is that you should do more of tax-friendly businesses. Locate your business in tax-friendly zones. For tax-friendly businesses, we have the agricultural business, manufacturing business, basic food items, pharmaceuticals, exportation, they are all tax-friendly. Agriculture, for the first 5 years of commencing agro-allied or agricultural business, you are not going to pay any tax. You are completely exempted from paying taxes if you are into agriculture for the first 5 years. And another after the 5 years is expired, you can now apply for another 3 years again for you to be able to be exempted. So for the first 8 years of agricultural concern, you will not pay any taxes except the personal taxes of the directors and the staff. Then after that, even after your first 8 years, if you make any losses, you can carry your losses forward indefinitely. And if you are into agriculture, you may not pay VAT and the like. So these are tax-friendly businesses. If you are also into manufacturing, there are so many incentives for manufacturing businesses. You can even get loans. You can also carry your losses forward indefinitely. Your capital allowances can be claimed in full, and then manufacturing concern, you'll be able to claim input VAT if you have passed the stage of a small companies. For basic food items, you will not pay VAT. If you are dealing in basic, we are talking about businesses that are tax friendly, that will not make you to pay more tax, to pay higher taxes, or be able to reduce your tax exposures. Another tax friendly business is pharmaceutical companies. If you are into pharmaceutical business, you will not pay VAT and then some other taxes. For those that are in exports, that are into exports, you will not pay. All your proceeds from your export, if you are able to repatriate them and use them to buy raw materials and the likes, you will not pay taxes, and so on. And then the tax-friendly zones are the free trade zones around us in Nigeria. We have so many of them. So, in conclusion, the changes that are introduced by this act, either they are favorable or not, they are here to stay. And they will require you to consciously unlearn all the old practices and transition it to ensure that you comply with this new amendment. It is now important that all persons and companies deploy adequate resources to understand the changes and conduct impact assessment on their business. This will surely enable you to have a clear compliance plan and make the necessary adjustments you need. We as a company, we are posed to help you through this process of conducting this impact assessment professionally. And now you can adjust your business model to enable you to pay minimum taxes around. So thank you very much. We'll take questions and answers. If you want to contact us for any of these, for any of your tax compliances, we have our offices in Abuja and in Lagos. Our office in Abuja is at Labour House, 3rd floor, CBD, Abuja. The phone numbers and the email addresses of our directors there is listed on your screen. You can copy it. And even our Lagos office at Lekki, 22A1 Region Street, Lekki Phase 1. The phone number and the email addresses of the people to contact is there. Even my name is also there and my phone number. Thank you very much.
Thank you very much, Kike. Dr. Lubanjo, please. You can unmute yourself now. Thank you.
All right, thank you, Kike. That's very good.
Thank you
We
very much, sir.
appreciate you. We have very short time to go, and so I will call on AB to come and talk to us about the documentation. You have mentioned about record keeping, and record keeping nowadays is different from what it used to be. People are not going to be working face to face. Most times they are working remotely from different places. So they are using technology to do record keeping. And the revenue office will want to see these records. They want to see it. If you keep it electronically, they want to see copies of what you have done. They want to make sure that you are keeping it properly. And so we need someone to talk to us about how we can do this record keeping. There's a way you can do it. If you can't do it by yourself, there's someone who make arrangement for you, and they come and do it in your office maybe once in a week or twice a week, and then you just pay a small amount because you may not be able to employ an accountant to be doing it for you, and then you pay a subscription, and you will be able to get your figures. You have to get your papers in order and everything ready for you every month. You know what's happening. So she's going to talk to you now about technology. And so I call upon Benahita to please come and talk to us. Please be
Good
brief.
afternoon, everybody. Good afternoon, everybody. I'm
Good afternoon, madam.
Ebanehita, as Dr. Olubanjo has said. It's great to be on here with you guys. Thank you so much. An introduction to automation. As we all know, automation is the creation and application of technology to monitor and control the production and delivery of products and services. Now, that is when you have automation in your deliveries mechanism for your products and your services is on point, it's easier and a lot, technologically balanced so it can be effective. Now, the benefits of automation in today's world and how the products can help you. It lowers operating costs, yes, that is OPEX cost. It improves worker safety, reduce factory lead times, ability to be more competitive with your competitors. You have a higher edge. It increases production output. Results is, you can see the results impeccably. Now it's consistent and improves part production and quality. The quality of your produce, your product is seen, and its better planning is achieved. It reduces need for outsourcing. You do not need to outsource your products or services. You can do it in-house. Easy integration with other systems. You can come up with 2 or 3 systems working in as one and maximize labor. Everybody has a part to do, and it's easier to, do the whole work effectively. Next slide, please. Benefits of our software products. Yes, they're smart and cost effective in business management. Yes, you can have good value for your money and you have the products effectively and done well and smartly performed. It takes control of all business operations. All the business operations in your system is totally controlled. You have it controlled intelligently. It gets a holistic picture of your business. You have a plan of your business and you know how to work with the plan. You know how to get the goals done in a smart way. Automation banking. Sometimes you miss when you have a lot of work to do, you don't need to go to the bank physically. You can do it on your own online. It tracks inventory in real time. Yes, your resources are easily tracked for you. You can access them anytime. Now there's transparency and good basis for decision making. Yes, management can make decision at the top management level can make good decision, and there's transparency in the workflow, and everything moves fine. Workflow and portfolio planning. Yes, you can plan your business. You can plan everything you have to do, and workflow is smoothly done and everything is in control. Now, personal responsibilities and time tracking. Yes, everybody, like I said before, has their own part to do and their time allocated for it to do everything. Now there's flexible cloud-based project portfolio. Everything is done on the cloud, so there's flexibility. And intelligent sales and marketing. Someone asked the other day what intelligent sales and marketing means. This is just when you are promoting your products, you don't need to do it by moving indoors. You don't need to do it by yourself, walking or talking to people. You can do it online, which is done easily when you have the cloud-based system. So it's intelligent sales and marketing. You can easily send some solutions via email, via calls, and through different sources of the products we have. Now you have proactive customer service. Customer service management is proactive. Who needs these products? SMEs, pharmaceutical companies, manufacturing companies, FMCG, superstores, oil and gas industries, healthcare centers, and name them. Everybody in the organization, in the business vector needs all these automation. We can help automate your business with our products. Our products are Sage Accounting Software, Zoho products. Zoho products comes in different packages, Microsoft 365 in different packages, Enterprise Mobility Suite, Project Online, SharePoint, Power BI, Microsoft Dynamics 365. Okay, the next slide, please. So whom to contact? You can contact me, Ebane Hita, that is my official line. You can contact Fumi on that line too. And the email address you can always send your inquiries to is digital@shobanjointernational.com. Thank you so much. And if there are questions, I'll be willing to answer you. Thank you.
Thank you very much, Abby. Thank you very much. Our time is fast spent,
Yes.
and I'm going to ask a question, and then I'm going to make a request from you. If you think that this tax thing that we have done now, we should do an advanced stage of it, you put it in the chat and put your phone number there, and then we will do that. If you have a question, you also put the question there. We will attend to it because within the next 1 hour will finish in 10 minutes time, and so I will bring just one question for us to do. It says, can I break my company into 4 different companies with less than 25 million turnover so that I will not pay any tax? My turnover now is about 100 million. So if I break them, he's saying that if he breaks them into small companies of less than 25, can he do that so that I will not pay any tax? Kike, what will be your answer? Kike, Kike. Okay, Kika is not there. Let me just quickly, because of the
Okay,
time.
okay, all right.
All right.
Yeah.
Okay, if you want to stop, now talk. You say, can I break my company into 4 different companies with less than 25 million so that turnover, so that I will not pay any tax?
Well, it's part of a tax planning to break it, but there is this, if you break it now, the thing will still come out because there is this transfer pricing reporting now, documentation and reporting, which you must report as long as you have more than one company in Nigeria. As we speak, if you have more than one company in Nigeria, you must report the 2 companies, the transfer pricing, whatever is going on between the 2 companies to the tax authority, to the FRS. But if you are not having anything to do with, if the 2 companies are not having any issue, even when you're talking of related parties now, one directors are the same for the 2 companies. They're supposed to report the they're supposed to report whatever you are doing in those 2 companies to the FRS. So in that way, the thing may be leaked, and then it will come out to the whole tax authorities, and then they will tax you.
All right. Thank you very much. In addition to what you have said, legally, it is possible for you to do that. Now, there is no law saying that you cannot do that. But if you do it, the government will come up, maybe by next year, they will come and say, you are not able to do that. By that time, you have already broken the company up, and you'll be paying so many charges. You'll be rendering returns for the transfer pricing, as I said. You'll be registering returns that you are not to the CAC. Every company will render returns to CAC. You will also render returns that your the turnover is not up to 25 million. You still register, you still render returns to the revenue office. So you have a lot of work to do. More work will be done, and they can cancel it anytime. So it's not advisable for you to go and think that you go and create 4 companies in order that you will pay no tax. It's better to pay for you to pay small tax. Devise means to make sure that you minimize the tax and the burden is not much on you. We will have to close now. If you have questions, please put them there. We also have a chat group. You can also put in there and put the questions there. You can contact us individually. We will reply to you. We say thank you very much for coming, and I hand over back to the host, Kenny Ulubanjo, as we will be going for another meeting now. Thank you very much.
Thank you very much, sir. I'd like to thank each and every one of you for being part of today's program. As a matter of fact, the next week's program is going to be questions and answers on taxation. And I would like to, I will send out the links to you on time so that you can join. Invite your friends to join, invite your business partners to join so that you can have answers to your questions. And if you do have question in any area and you want answers before the week runs out, please post it to me in a WhatsApp, through a WhatsApp chat group if you are in the business chat group. Otherwise, you can send it directly, or you can send it to adebola@sobanjointernational.com. adebola@sobanjointernational.com. Thank you very much. I'd like to say a big thank you. And thank you, Kayode. Thank you, Chuki. Thank you, Oladokun, for joining. Thank you, Peter. Thank you, Emmanuel Wosu. Thank you, Oluyemi, rather. Thank you, D. Opara. I'd like to say Dr. Oluwalano, thank you. I can't mention all your names, but a very big thank you to each and every one of you for joining us today. Thank you very much. Enjoy your day and have a prosperous business week.